Hello friends, I am Anand Bharat and welcome to our very first video on share markets. So we hear about the term share market in news channels or whenever we read a newspaper, there we get to see some news like share market is in profit or Sensex falling down or Nifty gained 100 points, etc. etc. So a person who doesn't know anything about share market finds this very complicated and he might be wondering what the share market is and how the share market works and how it makes profits or losses. And if you are trying to invest in share market but doesn't know anything about it, this video series on share markets will help you learn the essential basics so that you can understand what and how to invest in share markets. So friends, these are the list of topics we are going to learn in this video. So we will see what is the share and what is share market and why people prefer share market and how shares are divided among people and how investors make profits or how they go into losses. So let's see what is a share. This is the first basic term one need to and one should know in share markets. Share is a part or portion of something that is divided among people. Share refers to the partial or the extent of ownership a person or entity has in a company. Share represents ownership on company's assets and earnings. That is, for suppose if you have got share in a company, then you are one of the owners of that company, company's assets and company's earnings. And company's earnings mean both profits and losses. The more shares we acquire, the more ownership we get in the company. Shares, equity or stocks, all are similar and all mean the same. What is share market? So we understood what is a share. A share is the extent of ownership a person has in a company. So where do people buy and sell their shares to others? So we need a place where we can buy shares from others and sell our shares to others. So we call this place share market. Share market is a platform where shares or stocks of publicly listed companies are traded. It is a place where shares of companies are bought and sold. Publicly listed companies are companies that have made the ownership available to the public. So anyone who has some capital and who is willing to invest can buy shares from those publicly listed companies and they can later sell their shares to others through share markets. So friends, so far we have seen what is a share and what is share market. And now let's see why do people prefer share markets. So let us first of all say you want to establish your own company. So you need some capital to do that, but unfortunately you don't have enough money to get your company established. So then you can either take loan from a bank or you can enlist your company in share markets so that you can divide your company's ownership into shares and you can get investors for your company by selling those shares. Let us first look at the case of taking loan from a bank. If you take loan from a bank, you need to pay interest to the bank. Okay, let's say you took loan from the bank and got your company established successfully. But your company didn't work out well and it went into losses. But still you have to pay interest to the bank. And this paying of interest becomes another risk to the already loss you have got in your company. And you will eventually go into debts. But if you put your company in share markets, you would get capital for your company without having to pay any interest to anyone, but just by dividing your company's ownership into shares and thereby selling those shares through share markets. How shares are divided? Let's say there is a company ABC and it wants to extend its branches or its output production. So in order to do that, it needs some capital. So let the total capital requirement be rupees 1 crore. And the company has decided to divide the company's ownership into 1 lakh shares. So then each share value becomes rupees 1 crore by 1 lakh is equal to rupees 100. So if a person Anand has rupees 5,000 and if he would like to invest into ABC company, then he could buy 50 shares in ABC company, and he can then become one of the owners of that company. How investors can make profits and how they can go into losses. Let's look into profits case first. So let's take the example we discussed in the earlier slide. So Anand has bought 50 shares in ABC company. Unfortunately, the ABC company worked out very well and it made very huge profits of rupees 1 crore. In addition to its initial investment, that is rupees 1 crore. And so automatically, company's share value got raised and it reached a price of rupees 200 from rupees 100. And so Anand decided to sell each share at rupees 200. So 50 shares into rupees 200, that is equal to rupees 10,000. But Anand's initial investment was rupees 5,000 and now he got a profit of rupees 5,000. Other than his investment, rupees 5,000. Now loss case. What if the company performed poor and it went into losses? So ABC company performed very poor and it went into losses, and so automatically the company's share value got decreased and it dropped to a price of rupees 50 from rupees 100. And so Anand decided to sell each share at rupees 50. So 50 shares into rupees 50, that is equal to rupees 2500. So he sold the shares at a price of rupees 2500 out of his investment rupees 5000, and so he got a loss of rupees 2500. So friends, you might be worrying and thinking on how to avoid losses and how to get profits. If you try to invest in stock markets without any basic knowledge and without knowing how to invest in stock markets, you will definitely end in losses. But don't worry, I'll make you learn how to reduce the risk of getting losses by the end of this video series. But what you need to do is to just subscribe to our YouTube channel Beginning Educating and follow this video series. And if you like this video friends, please like it, comment it and share it. If not, feel free to unlike it. Thank you very much for watching this video friends. We'll see you in the next video. Until then, bye bye. Have a nice